What's up, guys? Good morning, good morning. All right, or good afternoon, I should say. Sorry about that. So yeah, today we're doing a Sunday Skype conference. We've been doing these every Sunday, and today we figured we'd live stream it so you guys can kind of see what we talk about on Sundays. We're just going over strategy, what our plans are for the upcoming week. This upcoming week, I'd really like to get up to 300 shares. I've been using 1 and 200 share lots, but I'd really like to get up to 300, start taking a little bit larger gains. Yeah, if you caught my video I put out this morning, I was reviewing my P&L, as you can see here. This is my P&L from the last month. I think I was at 65% accuracy in the last month, and so not too shabby, especially the last 3 weeks especially have been really good weeks. This past week I had 4 out of 5 profitable days. The week before that, I had 3 out of 4 profitable days, so 75%. And then the week before that, I had 4 out of 5 again. And so I've been really hitting it lately. The last few weeks, I've only had I'm averaging 1 losing day a week, and so not too shabby there. But yeah, what's up, Mitch? Mitch is here as well.
What's going on, guys? How we doing out there? Excited. A Sunday, guys.
Yes,
I'm
sir.
taking it easy, man. Had some early work, but now taking it easy. Just doing some studying. You got to study on those Sundays.
Yes, sir. So yeah, so we were looking at what we're really looking at, I want to go over the all-day fader, right? Because if there's a strategy that I'm going to hold, throughout a few hours at least, it's going to be what's called an all-day fader, and it's basically a gap fill strategy. Here's an example of MDXG, and a lot of the times it starts to set it up with a VWAP fade. So if you look at MDXG here, this is from Friday, I think. You can see a really nice VWAP fade here. Look at this tap of the VWAP. It hit just above it, but beautiful little VWAP fade. And then it just faded all day. And this happens a lot. Stocks will be very weak throughout the open, and then they'll just fade out all day here. And you can see this one faded. It rebounded some before the end of the day, but it faded all the way down to below the closing price yesterday. And so that's the significant thing, almost down to $4 here. As you can see, went down to 403, so not too bad there. How's the stream looked? Is everything clear? Mitch, you there, brother? I think we lost Mitch. Let me check. Or he might have muted it. He might have took a walk away.
What's going on, man? I'm
Okay.
here, man. I'm
Okay,
here
yeah, for
just
sure.
setting up. No, I lowered my mic because I was doing some work.
Yeah, no worries. My kids are here,
No, but it
so
looks good, man. It looks good.
yeah. Hold on one second, man. Hey, Mitch, hold it down. My daughter's calling me. I'm waiting for my wife to get home. So
All
I
right, all
gotta.
right.
Yeah, so hold it down for a second.
All right, guys. How we doing, guys?
Oh, here, I'm gonna share your screen, Mitch, so you can
Yeah,
go
go
over stuff
for it.
real quick.
Yeah.
Oh, here, share your screen with me, actually. Yeah.
Yeah, let me do that. All right, all right.
There you go. All right, you're good, Mitch. You're all set up.
All right, guys. How we doing? How we doing? Everyone can hear me good? I hope so. Raising my mic a little bit just so in case you can hear me. All right, so let's go back. Let's see what happened with MDXG. This is the real key, guys. Usually you guys get to the market when? Right around 9 o'clock, right, guys? This is when I like to show the beginning of stocks, guys. What we're going to do is always we're going to find the support, guys. We're going to try to locate where is the support and where's the resistance, guys. All right. Got resistance here. You can put it up here. You can do like a wide range of the stock there. Let's start going through the day. As we get approaching 9:30, we get this kind of what? Trend line, guys. Trend line, guys. That's what you're gonna start building. You want to start seeing where's it building to. All right. So then what I would do is I would notice that it's tightening out, right? This is kind of an outlier right here. This isn't really part of the trade right here. So what I'm looking for is to see what happens here, right? Important prices, guys. Start drawing it out for myself. Boom. All right. As we approach, I want to see what's going to happen as we make this push. If we're going to get up in here into the fives, guys. If we're going to get into the fives, then of course we'll look at it on the long side. But what we really want to do is see when it approaches this down here at this 53. Market opens. What happens? We get a little down push, a little rise. It comes down through that 53. And when it comes back to the VWAP, that's when we get on it, guys. That's when we get on it. And our target, it's always going to be the support, guys. I took a little profit here at the first one, the support. And then we look at the next support, which is down here at the 45.
Yeah, I sold this one way too soon, man. I remember I made like $10 on this trade, but it faded almost all day. Like it faded all the way down to 4. And I sold it way too soon. But I remember taking this one. We both profited from this trade, but if I can critique my trade some, I definitely sold this one way too early,
So like I say, guys, it's always about, getting some support. And if you have enough shares, you can take some at that support there. You can take some here, and then for the breakdown, you can keep just a little bit. Because if it comes back up here, you can add your shares back even and take some more for a move back down. But as you can see, it hung around here, got hammered here in the 40s on the level 2s, and just did what we call an all-day fader, where you can just hold their shares, essentially. If you had that 100 shares and you saw this crack down here, all you're looking for is bumps up here for you to go ahead and add. But you probably wouldn't add through all this. You could go all the way down here into this 430 area, where you could start looking for this little bounce here for an add here in the 27s. See it not get anywhere near this, and you can go ahead and get this next move to this $4.
Right, for sure. Exactly
the
right.
The real key is holding a little bit of shares and now playing with the money that you just made through all this
big downward push. What Levi said is right. Levi Blackburn says, take your partial near the support and let some ride all day. And that's exactly that's what I want to start doing with some of these setups. And the big thing, I might steal the screen from you for a second.
Yeah, go for it. Go ahead over.
Yeah, so the big thing here is that what Mitch was talking about earlier, right? So like it builds the support in pre-market. You can see obvious support here. It got rejected here. So obvious support right here. And so once it breaks under this level and holds, it's got all of this room right here. Let me see if I can draw this. I'm trying to think of the best way to draw this. Here, I'm just going to do this. It has all this support here from this down to the closing price, right? At least down here, right here, down to the closing price. So it has this entire gap to fill right here. Maybe a little ugly, but you can see this gap to fill, right? Because there's no really support or resistance around it, right? So it can just fall. It can just crash. And sure, it might rebound a little bit later, but you can set a trailing stop. You can set, just get out when it hits the support. But it's a gap fill strategy, and it's a very popular strategy. And these happen so much. What's the other one I traded? Yeah, Carter, we're talking about shorting. We're short bias traders for sure, man. Like that's mostly what we do is short. But, Mitch is a little bit better at going long than me. Let's look at GERN. Yeah, GERN was a nice little long there. I know, what was the other one I traded, man? I can't think of the other one I traded.
I got one nice that I can bring up.
Okay.
I got AMAT. That was just a little while ago.
There you go. All right, you're back up, man.
All right, you guys got the date down here. But when I was watching CNET when they had done a little breakdown, then we quickly moved on. I moved on to AMAT, and we could watch this one even trade live, guys. So the real key, guys, is you got in that big old wash. Big wash, lots of volume. Now we're looking for a move to the VWAP. As you see me clicking above there, just trying to figure out the pricing that I want to figure out my entry.
Right. So if you guys are new to our streams, like we trade a setup called the VWAP fade setup, and it's basically a bearish trend and then a bounce back to the VWAP, kind of like a dip buy, but for shorting. And your plan is to get in around the VWAP area and hope it acts as resistance. And so you can see, what is the VWAP on your chart? The yellow line?
Yeah, the yellow line there.
Okay, yeah, you can see the yellow line is the VWAP, and so we're essentially looking for a bear flag entering at a bounce to the VWAP, right? And this is a back-tested setup that I've used. If you follow along with our streams, I've been showing a decent amount of consistency lately with this one. And when I back-tested it, it had about a 73% win rate. So it worked 73% of the time when I back-tested it over a period of a year. And so it's pretty good consistency there with the VWAP fade. But yeah, you can see Mitch's live version of it here.
Yeah, you see, it kind of made a move up there to the VWAP, and a lot of times you can get a little faked out if you try to rush your entry into this kind of trade. That's why I always just wait for the VWAP. If it doesn't get to the VWAP, I kind of just let it go, guys. Like, even on that red candle, of course you get a little bit of that FOMO miss. You see it go up there about 40, 50 cents and then just drop immediately. You're thinking that you missed the move. But instead of that, I'm just waiting patiently. You can move a little forward here. Actually come back to it.
There you go. That's a good example. You can see that upwick to the VWAP is, VNet. Yeah, that's it right there. There's the bounce to the VWAP.
All right, guys. And then you see I didn't really chase it there. So now I'm looking for my attempt here.
Right.
And I'm just waiting patiently here. A lot of people would get in there at that 40. That's why you got to wait for that VWAP to get tested.
That's
what
something
I'm going to use now I know that over here is what I want to use as the resistance.
Right, like for sure. Like one thing I do wrong with this setup, and I mean, sometimes it works out for me. It probably works out for me more times than it doesn't work out still. But one thing I really do wrong is I enter way too early. Mitch does really well about waiting for that bounce to the VWAP. Like he waits for that bounce, takes it, and wants to get in right around there. Sometimes I'll rush it and get in a little early. But regardless of how you approach it, it's a legitimate setup, as you can see here. Yeah, sorry, I'm just switching screens. I'm gonna pull up some of my trades from this past week. And sometimes it does bounce above the VWAP, and that's fine. You know what I mean? Like the key here is having good risk reward. Like if I'm looking at this just off the top of my head, like your risk would probably be somewhere around.
That's what you're gonna see. Look at that instant. You see how I saw those 56 bounce up there and get washed out. When I saw them wash out, that's where I wanted to get in. It bounced up right there again to those 56. I was able to get in. You can see that's almost near the very top there. Now I'm just looking for this move back down to this 43 area to take some. Right here on this first move down, I can just take some off just to pay myself.
Right.
Boom.
Man, look at that upwick. Oh, it disappeared.
Yeah, it was one of those fake ones. It's a fake out.
It's a glitch is what it is.
Yeah, it's like a little glitch.
Yeah. But yeah, I mean, it's this kind of shows, like, this is what Mitch and I do. This is what Mitch and I do. Every day we use the same setup. It's the same setup every single day, and it looks just like this, right? Like you can see bearish trend at the open. Here's the open here. You just see a wash, and there's a few VWAP fades here, honestly. There's here. You can see this bounce at, what is this, about 937 right here. And then there's this bounce here, and it's still never held above the VWAP. But the great thing about the previous bounces is you can set your risk area to both of these, right? You can use these areas as your risk since they were previous resistance. And that way, if they break above that resistance, it's a safe exit. And you set your price target at the low of the day. And so, for instance, if you get in at 43.50, set your risk here at 43.75, you got a 25-cent risk. If you set your reward at 42.50, you have $1 a dollar reward, maybe a little bit less than that, probably about 3-to-1 risk to reward if you set your target at the low of the day, at that next support at the low of the day. And so, one of the things that Mitch and I have done really well is we're combining a high accuracy, reliable setup, and we're combining it with risk to reward. And if you combine those two things, like if you take a back-tested, reliable setup and you combine it with proper risk to reward, like at least 2-to-1, the profits are going to come. Like you're going to start making money trading, and you're going to start having much better P&L. And that's something I really didn't understand in the beginning. You're always trying to work towards being a profitable trader, but that's not something I really understood at the beginning, and I kind of just ignored it. Like I would hear people say, you got to focus on risk to reward, and I would say, yeah, that's great, but I'm just going to trade the patterns and setups. You know what I mean? And so once I started really focusing on the risk to reward in these trades and trying to find good risk to reward, and it's not even just about any setup with good risk to reward. It's that certain setups provide better risk to reward organically, right? And so, for instance,
I would definitely have to agree with that.
Right.
That's where it comes to it, And
exactly.
At the end of the day, when we're trying to do the VWAP fade, the real move that we're looking for is, as you saw, we took some at this support there at 43, but the real move we're looking for is that second support move down to here. And so that's what we're looking for. The real key is when we get a good signal from the level 2 or the time in sales, this is the kind of thing that I look for. As that made its approach down through there, that big short came in here, knocking us down.
Right. And a lot of times I hear people sit there and tell me like the VWAP isn't good, the VWAP's garbage. I've heard somebody say the VWAP's garbage. And you can see here, like you can see how closely the stock follows the VWAP and how much resistance it acts as, especially if it's in a bearish trend. And you'll see this pattern so much. Like this happens, at least once a day with my watch list stocks, right? Where a stock has a bearish trend like this, and then it just bounces to the VWAP, comes back down to the low of the day. Sometimes it ends up breaking under and just washing out big, and sometimes it'll just kind of consolidate at the low of the day. But regardless of whether it breaks down under the VWAP or under the low of the day, or if it bounces back to the VWAP, it doesn't matter, because if you get in around the VWAP and sell a partial at the low of the day, even if the stock bounces all the way back to where you entered the position, it's still going to be a small winning trade. And if it actually does break under the VWAP and keeps dropping, it's going to be a much bigger winner. And so that's why the risk to reward is there, is because you can set your risk at these previous VWAP touches, and you can set your reward at the low of the day, giving you, usually it's at least 2-to-1. A lot of times it's right around 2-to-1. Sometimes it's better than that, But yeah, Danny.
You get that lovely little move right here.
Yeah, for sure.
You see? And when those last little bounces, that's when the big boys make their money, guys.
Right. I'm trying to analyze like the timing, because most of the time we get into these setups at like
right there. Look at that. You see the 10 seconds or right by the next minute candle. And we get that move to the next support there. And all I'm looking for is, where am I going to take profit? A lot of people don't know where to take profit here. You need to look at your supports and your resistance to determine your exits. And they should be determined beforehand. And then, boom, you're going to be able to get out there.
Right. Yeah, I'm trying to pull up my example of it. Did this one end up cracking under those lows and keep going?
Yeah, eventually.
Nice. So Miguel, this is TradeNet TEFs. It's actually TEFs, but it's the partnering broker with TradeNet. And so TradeNet is basically hold on one second. TradeNet is it's the best way I can describe it. TradeNet is for education, but they partner with TEFs. And so it's a CFD trading, but it's similar to a prop firm. They supply you with $14K in buying power with the intro package, and with that, you have a $700 max loss. And so if you go under 13,300, they close your account down. But and there's a profit split if you make money over the 14K, but it's only over 14,000. So they don't take it out if you're under that still. So for instance, if you bring it up to 15K, you know, they keep 300, you keep 700. For me, it's a 70-30 profit split, but I think it's different over each one. But I'll go ahead and post the link. If anybody wants to sign up to TradeNet, their sale is over. It ended yesterday, but I still have a link that'll get you 10% off if you're interested in that. And I'll go ahead and post that link. Give me a second. Let me find it. Yeah, and I'm going to show them one from Friday on mine, Mitch. So give me a second. Let me find it.
What's going on? Where the regulars at? Hey, how we doing, Danny? So pretty much we're doing our Sunday strategy review. This is where you guys can ask questions. You guys can ask us your strategy. We can review what you do. And we're here to help you.
Right. Definitely. All right, so I'm going back and looking at one. I'm going to look at one from the 22nd. Let's see what this was. Oh, wait, this is the day I took a loss. So yeah, I only had one losing day last week. Bear with me, guys. Let's see what I made this day. Okay, so that's Monday. Monday I held. Oh yeah, it was Snap. It was Snapchat is what I held Monday. And so these happen with even these higher fillets. But look how beautiful the Snap trade one or the Snapchat one was. And a lot of times these setups will happen. When a stock is gapping up a lot. Like here's a good example. You know, and they happen more than once during the day, right? So you can see a bearish trend. Here's one here. Here's another here. Here's another here. And so these happen over and over again a lot of the times. I would be very weary. You know, usually kind of Mitch and I's rule with the VWAP fade setup is that you got to be very skeptical after the third fade, right? So you see 1, 2, 3. Anything after that, it's just not reliable to me. So I'm not saying it won't work, but yeah, exactly. Like look at this. So you see 1, 2, 3. Usually by the third fade, the stock is getting a little bit exhausted. You know what I mean? And so it starts to kind of teeter back up. And so, you know, usually if I'm going to take it, it's going to be on the first or second fade. But just to go in depth about how I look for risk to rewards in these setups. Let's see. I don't like the first fade. There's too much consolidation there. But the second fade is a good one, right? So if you get into the second fade here, right where this second circle is, you could set your risk at, let's see where a good risk area would be. Right here at $12, right? $12 is a reasonable risk if you're in this second VWAP fade here. And so what is that? From 11, the range is a little small, but from 11.95, actually, I like 12.02 a little bit better. So in this case, you have a risk of about 10 cents, maybe 10 cents, maybe a little bit less, maybe 8 to 10 cents, and your potential reward would be all the way down here at about 11.76, 11.75, 11.76. And so if you enter here at 11.95 or 11.93 even, your your risk is 10 cents and your reward is from 11.93 down to 11.77. And so what is that? 15-cent reward, 16-cent reward. And so it's about 2 to 1, right? 7 to 8 cent risk, 15 to 16-cent reward. And so about 2 to 1 there. And that's what you want to look for with every one of these trades, right? And so that way you know. Hold on, Mitch, you're making some noise over there, brother.
All right.
But yeah, I'm basically looking for good risk to reward on here. Yeah, Mitch. Whoa, Mitch, you're making some noise, brother. I'm gonna have to turn you down, Mitch. There you go. That's better now. But yeah, I'm just looking for good risk to reward. Another thing I've noticed, Mitch, about these setups, and like I think we've gone over this before, but like one of the ones that kind of showed me this was staff. Let me see if I can find the fade setup I was talking about. Here it is, right? And it's the same thing. So like you see all this support in pre-market here. And when it finally breaks under there and does this fade, it gets rejected at this resistance, you know, and then it has twice the resistance above it. And so it just kind of fades all day. And staff is a good example of an all-day fader. This one just ended up fading all day. And it had this beautiful fade at the open. You know, and a lot of times, especially, one thing I've always tried to say in trading is that the more, you know, the more setups and the more resistance areas that are going on at the same time, so whether they be a previous high and a $0.50 or, you know, the VWAP and a moving average, when all of them are right around each other, it acts as twice the resistance, right? And so not only does it have resistance at the VWAP, it has resistance at this previous high right here in pre-market at 1117 and the VWAP, and I'm sure, and this previous low right here. And so when all these different resistances kind of combine around the same spot, which is the VWAP, you know, that's kind of the A+ setup I'm really looking for.
Alright, I'm back, and I have to give Danny a little award. Laundry day, he got it.
Oh yeah, for sure, man. I was wondering what that was. I thought it may be your AC, you know.
I was like, what is that noise? And then I realized, oh my god, that's the washer machine.
Yeah.
Alright, yeah.
Alright, I'm gonna go ahead and share your screen. I'll be right back, bitch.
Yeah, man, I got this. Alright, so perfect. I saw a question up there. We had a question by T. Walker. He said he's having a problem holding winners and taking profits early. What ways can you implement to get the bulk of the move? The ways you can implement to get the bulk of the move is what I like to use is you really got to understand where you're taking profits, what your strategy really wants you to do. Because your plan shouldn't be changing while you're taking your trade. So in this case, if my entry is here at 62, I know I should be taking some profit at the first support or this support. All right? And so the real key is taking some and then taking another for the next leg down. So you got to understand supports over here, so that you can understand that if it breaks down that support, where's the next move? The same way goes for the upside. Let's see if I can find the stock like CGC.
There you go, guys. I turned Mitch back up. Sorry about that. I had turned it down when the lawnmower or when the laundry started yelling at us, and so there you go. Mitch should be up now.
All right, guys.
Sorry, man.
No. It's good. It's good. I don't know. Did you guys? I don't think you guys got any of that. But all right. I'll go right back. All right. So the real key to getting up sizing and knowing how to take and maximizing your trade is going to be to take some at the support and understand that you're trying to get the next swing down. Another way to really increase it is to take some on the first swing. And then when you get a bounce back to your entry, you go and you take your entry right back in. It's what I call the momentum shares. You know, let's take a look at it on like a long ways. So some of you guys trade long. Let's take a look. We got a CGC here. We get a little breakout here. All right, so perfect. You see this run here, all right, guys? All right, so once you get this run up here, guys, what we're looking for, guys, is we're looking for a support, right, to determine where the support is, right? So most people can find the support, and they start locating it right here. They start seeing, all right, so that 43 mark, that 42 mark, that mark's holding really well. So then when we start seeing these bounces, what I usually look for is my 3 rule. I could go in this, but most people wouldn't understand this on a one day basis. So I'm looking for this entry here on this 9 EMA. When I'd get that entry there on the 9 EMA, I'd look to sell my first bit at the resistance, guys. Where's the resistance? Right here, guys, up there at that 44.80 level. In that range, you should be selling half of your position. Now you can sell up when it rips. You can sell another quarter position up here near that 45 important level. We all know that sometimes you get that rejection. When you get that move right back down here, this is where the good traders are not just getting out of the position here in the 80s. They're adding back in their position, holding where they got in from. Now they're break even down here at this 9 EMA, at this 76, and willing to go ahead and take that ride back up there at that 45 with their shares that they just made money from. What they call that is playing with house money. The gray line, the only thing I have here, guys, is a 9 EMA and a VWAP. But what I'm really trying to explain here, guys, is how you really take that next position. Is what you want to do is you want to be taking some on the rips, and when it comes back, adding that shares that you just got off right back. It's what I call momentum shares. So let's say if it was 400 shares that you got in here, I would sell 200 here at this first resistance test. I would sell 100 on this rip, and I would add back about 300 or 200 back here so that I can get those shares right back here and get this momentum back here. If for any reason it comes back to my number, I break even and I take these gains that I made all through here. Good, you're good. That's exactly it. Now I just wanted to make sure that I answered T. Walker's question there. Anyone else got any questions? That's what we're here for, guys. You guys can go ahead and put up a question in the chat. We can help you guys out, answer some questions. If not, we'll go ahead and just continue looking at different setups that we trade, and we can that way just go forward and teach you guys some of the setups that we do. Oh, Boston Market over here. Boston Market, man. Yeah. Don't talk about the fire. I'm about to get on some fire. All right. There you go, Walker. That's what we're here for. That's exactly what we're doing this Sunday chat. Most people don't come on Sundays, but we're here to actually help you guys. We normally go over our own strategy, go over how we're going to go over determine risk for the week. How we're going to use our edge. We got different strategies that we use. So I always say that you got to stay in the process, and that the approach is the destination. So how we approach the week and get ready is how we're going to go ahead and succeed. Have we looked at Cron? We could take a look at that. I did a couple trades. What day you guys want to take a look at? Is there any specific day, any certain trade you want to trade look at? Yeah. We have this one when Kron did this move in what day is this? The 22nd? Right here. This is not bad. We could talk about. Yeah, it's on the 22nd. Yeah, it's a fade. You could talk about that one. Bring that one up. Yeah. It's perfect timing, you know. No stress. saying they're having some audio issues.
Okay, sorry about that, guys. I had my mic turned down because I was eating, man. But yeah, so if you saw that last trade, right? Let me pull it back up. I get out so early here. I get out at like 39. I get out at like 39. It eventually drops down another 50 cents or so. I take a $25 profit, but a $25 profit is, that's small in the grand scheme of things. And so I could have held it all the way down here and made a little bit more money. And so what I was saying is I need to work on holding my stocks longer, right? Like once I see profit, I'm ready to just take the green day and be done with it. And, it ends up hurting me in the long run. All right, let's see. TLRY. 20. I mean, maybe not, man. Maybe I got out. Maybe that was a good exit here, But I got out. Yeah, that was a good exit. But I still missed 25 cents. But I guess my point is moot after that. But anyways, moving on. That wasn't the point I was trying to make. If you look at TLRY here, this is a good little fade that I drew. But yeah, so anyways, the point I'm trying to make here is that I have to be able to sell. I have to be able to take a partial and move on. Like if I start reviewing my trades from this past week here, let me get this out the way. So that was on the 21st, which I think was Tuesday. Monday, I think I took a $20 loss. Tuesday, I had a $26 gain. Wednesday, let's look at Wednesday. Oh, no, Monday I held Snapchat until it went in my direction and had a green day on Monday. Tuesday I had a $20 loss. Let's look at Wednesday now. Or no, Wednesday I had that trade. Thursday, let's look at Thursday. Thursday I had a little bitty $15 gain, but I'm just trying to look to see the stocks that I made money on. So LB on Thursday the 23rd. All right, so let's look at LB. LB was another one we traded. And again, one thing you're going to start noticing here, guys, is that we only trade one setup. And so we might not have the best abundance of setups. But yeah, look at LB Mitch on the 23rd. Beautiful fade. And it happened, like I said before, the VWAP fade happens over and over and over again, especially if it gets to kind of that bearish trend, that all-day fade trend. And so, look, I can identify how many times this setup occurred on the 23rd. Watch how many times this happens. Once here, two here. You could even count this as one if you jump in early. 4 times. Wait. 5 times. Really 6 times if you count this, but I'm going to say 5. So 5 times, if you look at LB on the 23rd, this thing just happened over and over and over again. It just faded over here, 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 and here. 5 times. And so it's kind of one of those things that it just happens over and over again. It gives you a lot of opportunity to, take advantage of these big short moves here. And usually the risk to reward is there, and the reason it's there is because it's bear flagging here. So like, for instance, again, all right, my bad, Mitch. You want to say something, brother?
No, exactly. No, you're completely right. I mean, this is why sometimes you got to focus on one stock. You can't just be all over the place, Right. This stock gave you multiple opportunities to just make some money. And then once you made some money, use that money that you made in the day to go ahead and try to leverage into this trade again and just keep making money. You could have made money about, as you can see there, 3 times. Clearly making easy money there.
Right. Like you can see it happens over and over and over again. Sorry, I didn't turn my mic back up all the way. But yeah, the point I was trying to make, guys, is that, if you watch our streams, one setup that we've been preaching about for months now is the VWAP fade. And the reason I'm preaching about it so much, and the reason I think it can give you value, is because if you're like me, right, I'm not trying to act like I'm an expert. I'm not trying to act like a guru. I'm not trying to act like any of that stuff, right? Like I'm passionate about trading. I love trading. And if you're like me, you probably tried a bunch of different setups. You probably kind of bounced around and traded all these different setups, and none of them really worked, right? Like sometimes they do, sometimes they don't. It's kind of a coin flip. This is the first setup that I found that isn't a coin flip. Like this thing works a huge amount of the time. You know what I mean? And so it's huge for me to find this setup, and you can see it reflected in my profit and loss. You know, like if you look at my profit and loss, 65% accuracy over the last month, but I'm getting much better at it. Like if you look at this week's profit and loss, I had 75% accuracy. You know, I only had 2 losing trades this entire week out of 2 out of 12. No, 1, 2, 3, 4, 5, 6, 7, 8. 6 out of 8 trades were profitable. If you look at the week before, from the 13th to the 17th, and this is something I went over in the video, but 1 losing day that week out of 4. The week before that was still pretty good as well. I think I had 57% accuracy. So regardless, every week I'm having more than 50% accuracy, and it's getting better and better. This past week was 75. The week before that was, I don't know all of them. But the point is that this setup works, especially if you learn how to trade it.
Yep. So let's go. Pull up my screen here. I'm gonna share my screen here. All right, there you go. I'm going to go back to the key here, guys, and talk really what we really want to talk about, guys. And what we're really talking about here is, you know, understanding profit to loss ratio and how to really be a gambler. You know, that's what you really need to take control here.
Oh, yeah, for sure, man.
All right. There you go. So now that you see this, you know, we could talk about really what I think why we've changed and why we've struggled throughout our trading is, and why we're going to be profitable from here on out, is that we've really attacked this 3-to-1 and 4-to-1 on our target. And what is this doing for us, guys? You know, most of the time, people will get to a point where they take 1-to-1 trades. 1-to-1 trades is what I usually see from most traders.
Right.
And this is really where we come into the issue, guys. If you're trading 1-to-1, you might as well just grab a quarter, guys, and take a flip.
Right.
You're going to probably have a better odd of being right. And then once you finally start getting into the 1-to-2, you know, you start seeing that, hey, you know, I don't really need to be that accurate. Now, when we get to start being on this 3-to-1 and 4-to-1 level, when we win, we don't have to be so accurate. Now is when we start seeing our profit actually start getting up there. You know, so this is what you really got to start calculating so that you can really start being accurate and be profitable. Because some people start focusing way too much on this 67% and 70%, and they think they can be up there. But to tell you the truth is that when you get up there, most of the time what you're doing is you're not holding to the right levels. You're taking profits way too quick. You're not letting your wins actually get up there to your reward. And then when your risk is coming, you're not even letting it get to your risk. You're usually just snapping off and getting out. And so you could have a high win rate, but how long will that last? For most traders, that won't last, and you'll get in a rut, and then you'll start pulling on your account.
I'm a prime example of this. Sorry, I'm eating, but I have to say that.
So a lot of traders will ask how you calculate your profit-loss ratio. It's pretty simple, you know. You just want to take the total sum average of the profit cents, first add it up, then divide it by the trades. You know, so if you got like a 30-cent winner, a 21-cent winner, a 45-cent winner, you add it up, you divide it, and that's an average of 32 cents. You know, so this is what you want to be doing. And the same thing for your loss side. You want to be figuring out your average cent losers. And this is what I really always talk about. You know, everyone talks about size. You know, I am getting bigger in sizing. And as we continue, me and John will, you know, of course, you know, start expanding and growing in account size, and you guys will start seeing us take bigger trades. But what we'll always go back to is focusing on cent winners. When you hear this term, this is what we mean, guys, is that we want to be hitting that profit to loss ratio so that we can get up there and still be accurate and profitable and not have to have the levels of 60, 70%. We can even be 50% right and we'll still be profitable.
Exactly. It doesn't matter. I mean, what you were saying earlier, like I'm a prime example of that, right? Like if you look at my P&L here, I'm not holding them to my levels. Like I'm not, even though most of the time my winners are bigger than my losers and I have more profitable trades, I still need to focus on holding them to my levels, like Mitch is saying, because a lot of times I have a great win rate. Like last week was 75%, but I'm not actually holding it to my target, and you'll see me get frustrated. If you watch our streams, you see me get frustrated because a lot of the time, as soon as I see a decent profit, I'm out. And then the stock will just keep falling and keep falling. And I'll miss out on, I'll take a $30 gain, but I'll miss out on what would have been like a $90 gain just by being too anxious to take profits. And that's the problem,
It happens. One of the key things is I always say, like, when you start keeping it simple, make things complicated when you're not trading, not live trading. Like when you're studying, really get to know your strategy. But when you're trading, it needs to be simple. You need to have already determined how you trade so that it's just entry, risk, this is the reward. And once you make it like that, you start trading a lot better. A lot of people say, that computers are probably going to trade better than human. And that's because they start to trade without emotions. Exactly. And, when you start, like, it's not about not caring about your trade, but understanding that your strategy is already in place to do that caring for you. You don't have to now worry about the trade. You need to be more worried about the execution of the trade. If your mindset is worry, then you're completely out of the game and you lose your edge completely. Your mindset needs to be, in most of these trades, looking to increase the risk while it's working for you.
But yeah, I mean, the biggest thing here, guys, is like I'm happy with my win rate. I think I said it on my video this morning. I think deep down inside, every trader kind of questions, regardless of whether it's a conscious thing or not. But I think deep down inside, every trader kind of questions whether day trading in and of itself can be a profitable endeavor, like whether you can actually be profitable trading. Because, and even if the proof is there, you have people like Anton Creel and like, I can't remember his name, but the guy who founded Thinkorswim, like the trading platform, like both of them do not think technical analysis works. Like they don't think day trading can be a profitable thing. They think it's 100% a coin flip. They think you're just flipping a coin. And you can watch their videos on it. Like they'll talk about it, and that's fine because everybody has their different opinion. And so like when I start to make these profits, I'm so excited about it because I know like the chances of me making these profits all on random, like profitable week after profitable week, like back to back to back, like that's so low that it actually means I have an edge in the market. And that's something I'm extremely excited about. Like, and my trading's getting better week after week. Like if you look at the whole month of August, I finished net profit, although it was 85 cents. But I actually finished the month net profit after trading, how many is this? 23 times. And the cool thing is that my gross profit is actually up there. Like if I take an average share size of like 100, 150 shares, like this is like 75, to 100 cents per share gain on the month, right? And so if I was taking 1,000 shares, that'd be $1,002, or $1,200. No, $1,002. But that's still great. $1,020. I don't know what it is, but that would be like over $1,000 in profits. If I would have used 1,000 shares on average, right? And so it's fine, and I'm looking at my gross profit. My net profit's still profitable. And this is with tiny sizing. So commissions are so much more of a percent of your overall gain than they would be if I was using 1,000 shares or 10,000 shares. And so the fact that I can still come out net profit using 100 shares on average and I can make $102 in gross profit, That's huge because that's, like I said, that is what, 75 to 100 cents a share, 75 cents to $1 a share. And that's great. That's on average, or overall over the whole month period. And so that's huge for me. I just want to keep that going. I just want to keep it going. And, at this point, it's just about scaling up now. Mitch and I just have to scale up, Kai or Cal, I'm trading with the intro package on TradeNet. Mitch is trading with, I think now Mitch is trading with the
student
package. Yeah, the student package. But yeah, if you're interested in a TradeNet package, there's the link to TradeNet there. You can go through that link. You get 10% off. I make a small commission from it, but I'm honest about it. If you want to help support the channel, you can go through that link. I appreciate it. If not, you can just go to tradenet.com if if you hate me and you want to, but you still want a TradeNet package, you can go to tradenet.com. You know what I mean?
And like always, guys, just go ahead and you guys can always add me. I put up my reviews. You guys don't see my live trading that often, but we'll be working maybe to getting you guys some availability so that you guys can see my live trading also.
Yes, sir.
Does anybody got any questions out there? That's really what we're here for on this Sunday. This is pretty much like our strategy Sunday session. We can go ahead and look over your guys' strategy, see how you guys are doing. Anybody got any questions out there?
Oh, that's rough, man. Yeah, man, it happens, brother. It happens, Cal. I mean, the big thing is like, I can't stress the importance of back testing your strategy, right? I can't stress it enough. If you don't back test, you're flipping a coin. It's like Mitch says, like grab a quarter, because like that's all you're doing. Even if you see somebody online that tells you it's a good setup or strategy, even if you hear Mitch and I sitting there saying, yeah, the VWAP fade, don't listen to us, man. Just back test it yourself. See if it actually works. Because you don't know what people are telling you on, in internet land. You know what I mean? Like, you want to back test that setup. Don't listen to me. You want to back test that setup yourself, to make sure it has an edge. Because you don't know if what I'm saying is true. And that's the only true way to trade. If not, you're going to be relying on other people your entire trading career. You have to back test your setups. If I could leave anybody with anything, back test your setups. You'll find setups with an edge, and then you can use those setups. But if you don't back test, you're just kind of guessing. You know what I mean? And that's not how you want to do it.
All right, so we got some couple questions here. We got commissions on TradeNet. That's about like 0.006 cents per share. And then we get into any tips for prepping for next week. What we usually do for prepping for next week is always review your trades. Your trades are going to tell you more than anything. These are actual moments where you are under stress. Do what me and John do. Record your own trades. So that way you can learn what you're really doing at that moment. Another thing you can always do is use the on-demand feature that John always talks about on Thinkorswim. So that way you can go ahead and look back on the market and see the trades again happen live right in front of you.
Yeah, if I want to go look back on LB, like look, if I want to go look back on LB, what is it, August? I can go to the 23rd on LB here, and I can retrade this market day, right? I can trade the VWAP fade on LB, and all I have to do is just go to August 23rd, and, that's it. LB, once it loads, I can trade it. I can change my sizing. I can look at it. Here's LB. There's the first fade. I can wait, I could sell it here, practice trading it, see how many times it works. And so go check out Thinkorswim on demand. It allows you to go back in time and retrade any market day, so within the last few years. And so I can go all the way back. If I really wanted to, I could go back to 2008 or no. Yeah, I could go back to 2008 and trade, Apple in 2008 or Microsoft in 2008 or anything like that. I could go back then. I could go back then and short Bear Stearns if I wanted to. You know what I mean? And just practice. But the point is to use it to practice. I use it to back test. This is what I use to back test. And so check it out. It's a huge tool for me that I use every weekend to back test these strategies.
All right. And all right. So let's talk about the next question. I saw a question by Seven bringing up what type of catalyst are we looking throughout the week to hunt for those VWAP fades. So what we look for is always we're going to be looking for gap ups pre-market.
Yep.
What actually catalysts like news? What we want to see is a lot of
Zero.
times is zero. Exactly. It's kind of funny, but those are the best ones, especially for the VWAP fade. These show stocks that are moving without no reason for it to jump that high. It's kind of like we got to understand, supply and demand with these stocks always come into play. And if for some reason a stock is just jumping up more than like 60% pre-market and it's already up, has no news coming out, no earnings anywhere near, and now is just fading throughout pre-market and then just hits that bid as the open comes, those are the exact ones that me and John are definitely going to jump on. How we can help each other look for more of those is pretty much what we do every day, guys. Is we go into the news, we look for the gappers, and we're looking for stocks to go ahead and really get through a support. So that's what I always mean by the first 5 minutes into the market are so important for us. We're looking to see which stocks are breaking through support with a big volume pool.
Exactly. You want to see, you said a big volume pool, right?
Yeah, that big volume with that when it breaks down through that support, we're looking for that huge volume to go ahead and get in there, and then that way we'll be looking for the green bounce to go into that VWAP. And what we usually like to come into play, guys, is we use the first 5 minutes to find the best charts, and that's why it's not really more of a collective. What we can do is kind of just bring charts to awareness. Everyone needs to work together in those first 5 minutes so that we can find and pull the best charts. Then once we pull the best charts, we make our decision based on the range, guys. This is when we start using our risk to reward and go ahead and use our trading skills to determine which is really the A plus strategy and setup and which is the B and C move.
Right. And usually the A plus setups consist of like, if just off the top of my head, like it's kind of something that it's not even like a conscious thing, right? It's something that if you trade it enough, like if you watch it enough, you kind of see the little nuances behind it. But like just off the top of my head, high volume is usually one of there. It needs to have good volume. If it doesn't have good volume, the spread's going to be gnarly. It's going to, it's going to fake you out a lot more. Sorry, my son's yelling in the background. But the volume has to be good. Another thing is that it truly does matter that it's in a bearish trend and that it previously broke lows of the day. Like if you look at LB, you can see this trend here. It's just a bearish trend going like this. It's a staircase bear flag pattern. It's just back, test this low, pull back, back down, and that's what I want to see. I want to see it kind of like a staircase, back down, push back up, maybe test the VWAP, and I want to see the VWAP follow it back down, right? And so if I don't know if any of that makes sense, but this is really what I want to look for here is the little staircase pattern, and it has to the VWAP has to be above it, right? Like a lot of times the stock will start to run and the VWAP's above it still, you know what I mean? But it's a bullish pattern, so you have to see a VWAP that's right around where that next flag is going to be. So it's hard to explain, but the VWAP has to be right around where it's going to pull back, right? So it's like if you see the natural progression of the trend, you want to see the VWAP at an attainable price, right? It's hard to explain. I don't know if Mitch can explain it better. And like he said, with regard to gapping up and gapping down, usually I found better. A lot of times what happens with big overextended stocks, I would dare to say that a majority of the time they end up failing, right? Like when a stock gaps up specifically over 10%, and this is all just my opinion, so don't take this as scripture, but, when a stock gaps up over 10%, a majority of the time it ends up coming back down, and so a lot of times it does it that day. And so I tend to prefer the VWAP fade on overextended gapping up stocks, like stocks that are gapping up. And it's like we said, like if it has zero news, that's better. You know what I mean? Because that means it has no catalyst keeping it up and it's just getting pumped up and it's going to crash most likely. But even if it has a legitimate catalyst, a lot of times with legitimate catalysts, stocks gap up and they're still overextended. They gap up too much. The trading term is overbought. You know what I mean? And usually they end up coming back down.
All right, we got another question from T Walker here. We got, when you're in a trade, do you look at your P&L and unrealized gains and losses to determine when to get out?
Uh,
And if not, how do you discipline yourself?
I tried to remove my profit and loss from TEFs because I was looking at it too much and I was just taking it. I was just getting out too quickly. Let's see if I still have it. Yeah, I actually removed my P&L from my chart. And so I think that was really necessary here. They got a new bug.
So what I do for that is, the main thing, guys, is know your profit. Understand that you're not there for the in between. You're there to go ahead and nail your trade where you want it. It's one of the key things that I've been working on, is understanding that you should know where your exits are going to be before you get in a trade, and they shouldn't be changing. And if you're looking at your unrealized and you're looking at the money change too much, you're changing your profit target based on money. And we all know that if you're going to go ahead and use money as the key source as where you want your profit, you're going to go ahead and activate the greed inside of you.
Oh yeah,
and
for
you're
sure.
never going to go ahead and trade without emotions.
Right.
You got to gain control of those emotions.
It's like we were telling Jonathan, I don't mean to use you an example, man, but it's kind of like we were saying, whenever you set a stop loss, like last Sunday, or maybe it was the Sunday before, we were talking about, somebody was asking us where you should set your stop loss, and he was saying that he was setting them at, if he loses more than like 5 cents, he gets out of the trade. And at least in my opinion, that's the wrong way to approach it. You want to set your price target and your risk area judging off of the chart. You don't want to judge it off of, you don't want to judge it off of how much you're willing to lose. You don't want to judge it off of how much you're willing to win, or how much you want to win, or how much you don't want to lose. You want to judge it off the next support and resistance area. You know what I mean? That's the only way to really do it. That's the only way to calculate risk to reward. If you let it be emotional, it's gonna hurt you,
Trading or gambling, man. Trading
Right.
or gambling.
Exactly.
All right, guys. All right, but we should be wrapping up here soon.
Yeah, guys, we're gonna go ahead and close it down. Mitch, you want to say anything else, brother?
Nothing, man. I'm just really happy, so many people were willing to show up, and come to the Sunday meeting. Most traders don't have live streams on Sundays, but we're willing to go ahead and come on and sacrifice some time with you, as we normally do this on an every week basis. Me and John going over what we're gonna do throughout the week, and go ahead and nail our strategy.
Yeah, man, it might have been a little rambly, but I mean, hey, we're giving this info out for free, and I mean, this is something that Mitch and I do every Sunday, and so we figured we just live stream it. If you guys want to see it live streamed again next Sunday, let us know. Also, if you want to sign up through TradeNet, one of the ways our channel makes money is we make a small commission if somebody signs up to TradeNet. And so if you want to sign up, here's the link. Go check it out. You get 10% off a package, which is the best deal you can get right now. The sale's over. It ended yesterday. And so you can still get 10% off by going through my link. Also, what was I going to say? Oh, yeah, man. I just wanted to say this. I don't think any other streamer on YouTube is actually showing net profits week after week, or at least profitable week after week. I don't think every other streamer I see on YouTube, not to hate on them, but I haven't seen any that have actually had an edge in the market. Like, a lot of times they'll be streaming and they'll stop streaming because they're losing so much, or they'll stop streaming, or they'll have their stream saying I'm losing this much money, and that's fine because, as long as they're not trying to sell you anything based off that. But, I'm really proud of Mitch and I, because Mitch and I have actually, transitioned over to being profitable traders live. Like, our viewers have been able to watch us kind of go through that transition of being, kind of break even, losing traders, and kind of transitioning towards, back over to being like a profitable, trader, like analyzing risk to reward. And so I'm really proud of Mitch and I just hope we can keep this going, because it's been really good the last 3 weeks. Mitch has been on point. My accuracy rate has been on point as well. My wins My win rate has been on point, and so let's just keep this going. Think positive, and we got this, brother.
Yeah, man. And the way I'm thinking about it is I'm ready for another streak, man. 10-day streak, this month. I'm looking for another one, man. I'm looking for the market to start heating up, take some more swings, and get ready to, really make some good money coming, this fall.
Right, for sure, man. And that's another thing is that you can watch us live. Like, we can't hide anything. We can't fake our profits. We can't cherry pick our gains and just upload only our winning trades, which is a lot of people do. You guys can look at our account balances. You can watch us get in the trade. We can't hide anything. And so I think that's huge for new traders to be able to see. That's how it really is trading. It's not these glamour, fake cherry picking trades. Look, I made $10,000, but I'm not actually going to let you watch me trade. I'm just going to upload my winning trades. Like, that's fake. You know what I mean? That's not real. That's either a paper account or they have a bunch of losers and one winner and they uploaded the one winning trade they had. And so, if I could just be skeptical, guys. Back test your setups, look for good risk to reward, and you'll be all right. But yeah, guys, gonna go ahead and close the stream down.
Yep. Last thing, last quote I'd like to leave you guys with is always think about this, guys. If you're focusing way too much about money, you always got to start thinking that you don't need to know what's going to happen next. Most traders always think they need to know the future or predict the future. That's not the way to trade.
Trader.
It's actually, determining your risk, and staying with a strategy. That's how you trade.
100%.
It's not really, being a predictive. There's no Miss Cleos in trading.
Right.
Let's put it that way.
You can't follow somebody else and be a successful trader. It might work for a little while, but it's not gonna. Like I said before. I didn't mean to interrupt you, Mitch, but
no, you're good.
It's like I said before. If you try to copy somebody else, like even if you listen to us preaching about the VWAP fade, even if you listen to us preaching about it, don't believe us. Go back test it yourself. That's the only way to do it. Like, you can't just copy off of us. You got to go back test that setup. Make sure it's legit first. And yeah, trader, I'm going to get to that question, brother. So just give me a second. I got you, man. But yeah, don't believe us. Don't believe anybody. Back test it yourself. See if it works yourself, right? That's the only way to be. If you try to copy somebody, you're never going to be successful. It may work for a little while, but eventually it's going to fall apart. The only way to do it is to truly back test and understand risk to reward and just kind of implement that in your trading. That's the only way it's ever going to work. But yeah, trader. Sorry, man. I know I interrupted you during your quote, Mitch. My bad, man. Don't need to know what's going on to happen next. Exactly, man. Exactly, brother. My favorite trading quote is, the key to trading is to be fearful when others are greedy and greedy when others are fearful. Warren Buffett, I think, is the one that said it. It was either Warren Buffett or somebody else. There was another one that said, the time to buy a stock is when blood is running through the streets. A little morbid, but that's one of my other favorite ones. But yeah, guys, good luck for the rest of the day. Also, trader, the way you take profits out of TradeNet is that if you build up profits over the original amount they give you, like for instance the intro package has 14K, so if I were to build it up to 15,000 for instance, you can withdraw profits once a month. So you can withdraw it once a month, so at the end of the month you can take your profits out. Another month passes, you can take your profits out again, and so it's once a month you can take profits out of your account on TAFs and TradeNet. Mitch, you still there, brother?
Yeah, man, still here.
Okay.
Here, ready.
But yeah, guys, yeah, Sonic, have a good one. All right, but yeah, guys, I'm going to go ahead and close the stream down now. Appreciate everybody who joined us and listening to our trading rambling nonsense. But I hope you took a little bit from this. This is something Mitch and I do every Sunday, and so we figured we'd stream it today for you all. So appreciate everybody coming here.
See you guys tomorrow, guys.
Yeah, have a good day, guys. We'll be here. We'll be streaming live tomorrow morning at 8:45 a.m. market time. So if it's your first time joining and you want to watch us trade live, just join us, hit the subscribe button, and join us tomorrow morning at 8:45 a.m. market time. We'll be here. We'll be streaming live, going over what's moving in pre-market and stuff like that. So come check us out, guys. And yeah, good luck for good luck tomorrow. I'll see you all then. And yeah, have a good rest of your Sunday, guys. See y'all later.